I'd like to introduce everyone here to Vanstar Mining Resources. We're a gold exploration company focused entirely in the province of Quebec currently. I think I'd like to show you that we are a low-risk exploration play with our strong flagship asset that more than supports our current value in the market, plus our exploration assets and the fact that we have more than enough cash to do any work that we need to do over the next few years. And don't have to go to market anytime soon. I think will support the fact that we are a relatively low risk exploration play. In terms of our assets, the Nelligan project is our flagship, which is a joint venture with IAMGOLD. It currently has a 3.2 million ounce resource and growing. There's a drill program going on right now. There are other drill programs that were completed after this resource was published. And then beyond that, we have 4 exploration assets that are all 100% owned, and all of which are located in northern Quebec. In terms of the Nelligan project, it's located just south of the town of Chibougamau in northern Quebec, which is about, Chibougamau itself is about 700 kilometers north of Montreal, all accessible on a paved road. Chibougamau itself is a historical mining town. There's been a number of mining operations here in the past. There's all the infrastructure we need to put a mine into production. We have roads, we have an airport, we have workforce, power lines, roads. These roads here that you can see running down towards to the south of the highway are well-maintained lumber roads. They're used every day by heavy equipment. I've seen it myself. There are high-tension power lines. There's one in particular that runs right across our claims. So from an infrastructure perspective, we're ideally located. The project is accessible year-round, and great place to develop a mine, basically. In terms of the history of the project, it was acquired by Vanstar, back in 2010. Over the next couple of years, the company drilled the project and discovered 3 initial zones, gold zones. And at that time in 2014, as with pretty much the entire sector, it was difficult to raise some money. IAMGOLD came along and offered a joint venture, which Vanstar took advantage of. And since then, IAMGOLD has drilled the project, found the Renard zone, which is the main zone right now, has updated or provided an initial resource back in 2019, and has since drilled it and continued to expand upon what's the current resource. In terms of the joint venture with IAMGOLD, they currently have 75% of the project. They can earn another 5% by completing a feasibility study. I want to highlight that we're fully carried on this project. We don't have to put any money up to advance this project into production. And so even the feasibility, which would be a costly item, is out of our hands. So we don't have to dilute our shareholders in any way to advance this project. Vanstar would then retain a 20% interest, again, still carried. And we also have a 1% NSR on the 8 original claims that underlie the initial discoveries. Those would cover about 30% of the deposit currently. If there's gold discovered towards the east, we would add to these. Towards the west, we move away from these claims. Now, just another quick point here on the 20% interest, IAMGOLD could potentially buy that out. If they did, an independent evaluator would determine the value that's paid, and IAMGOLD would pay that, and then on top of that would give us a 1.5% NSR on the entire project. So under that scenario, we become a cashed up royalty company, effectively. If they continue and develop the project, and we maintain our 20%, then obviously that's a good outcome as well. And theoretically, they could also take us out. So there's a few outcomes here, all of which are just fine with us and fine for our shareholders. The project was awarded the Discovery of the Year award back in 2019 by the Quebec Mineral Associations, recognized as a world-class discovery. It was, at the time, had 3.2 million ounces at just over a gram. The four main zones, the Renard, Liam, Dan, and 36 zones are all sort of sub-parallel to each other. The Renard zone is a very large zone, can be hundreds of meters, or can be, say 100 meters thick or so, easily mined. But since the resource was calculated, IAMGOLD completed a drill program in 2020, which expanded the mineralized zone to the west by at least 700 meters, taking the whole strike length of the deposit to probably about 1.5 kilometers now. And there is currently a drill program underway on the project right now. Just a quick look at the resource as well. It was calculated at a 0.5 cutoff. Based on my recent visit to the project, it's quite clear that there's a prominent halo around this, around the deposit. A lower grade halo that the grade basically just tails off gradually, very slowly actually. And so, dropping the cutoff grade at higher gold prices, for example, would add significant ounces to the deposit. The current drill program is underway at just under 10,000 meters planned. When I visited the project a couple of weeks ago, the infill portion of that program was completed. Obviously, the infill is to tighten up the resource here and upgrade the resource for an update. And then the second phase is to drill the extension. And like I said, it was drilled out to 700 meters in the past. When I was on the site, they had just finished the first hole, which was around that same area. And then the idea was that there will be step outs of 200 meters, large step outs, to try to trace the zone out as far as they can, and then they'll come in and backfill from there. So program is going well, and I would expect that we'll see a couple of news items at least on this in the coming months, with the infill drilling assays coming out first, I think, and then the western extension following that. There's also, just to highlight, I'll show it on a different map, sorry, but to the east here, there's also some potential. It's a little more complicated. The west zone is fairly all intact and easy to follow. In the east, it sort of diverges and bifurcates a little bit, but there is more work to do here. There are some good results in this area. Just a quick note, there's a shallow lake here that, when I say shallow, I'm talking about a meter or two thick, deep at the most. We're drilling it with a barge in the summer, for example. A barge would just get caught up in the mud. It's so shallow. So they need to drill this in the winter, and we'll come back this winter to do that, to basically fill the data that's missing here. And then the idea would be that they will update the resource by the end of, say, Q1 next year. If they did it before drilling this, it would look, the deposit and the western extension would look like they're two different deposits when they're actually continuous. In terms of how we would value this project, obviously, we don't have any, feasibility numbers or any economic numbers on it yet. But as John mentioned earlier, the Springpole deposit was, PEA, was completed on that earlier this year. They're similar deposits in the sense that they're both open pittable, they're both similar grades, they'll both be similar sizes. Springpole is has some challenges in the sense that they're more remote than we are, further away from infrastructure. They are, they have some more technical issues with deeper lakes that need to be dammed to be built, and the metallurgy may be a little more complicated. Anyway, the point is that, if their with their numbers, I would imagine that Nelligan would have at least as good as what they have, if not better. And in their case, they came out with an IRR of just over 30%, or just under 30% after tax, with a value of just under $1 billion after tax, US. That would, if Nelligan comes up with similar numbers, obviously forward-looking statement, that implies a value for Vanstar that's many multiples of times where we're trading right now. And that just goes back to my point that, most people bias for this asset, which more than supports our value in the market. And so all of our exploration projects you essentially get for free. And then, so we can drill these assets, and with the cash that we have, if we're successful on them, obviously our shareholders will benefit from that. And if we're not successful, we just move on to the next project, and there shouldn't be any downside since we still, we don't have to access the market anytime soon. Of our projects, the Felix project is the most advanced in the sense that we're actually drilling it as we speak. The first hole here is completed. There's a 2,000 meter program underway. What we're doing here, this project is located in the Shakopee Belt in the Abitibi region. That's the same belt where Amex Exploration, for example, has made their high-grade gold discovery. And what we have here is a number of iron formations that we can see well on this high-resolution mag survey we completed earlier this year. We can see where they're faulted and folded. And what we're interested in for this drill program is this nice S-fold over here, which happens to coincide with a number of geophysical conductors, both megatem and IP anomalies. So we've designed our program to test this, and we hopefully will have some results here in the not too distant future. In terms of our other projects, Amanda is a little more isolated. It's a couple 100 kilometers north of Chibougamau, but it itself has some merit. And for example, in the previous trench sampling, we have a 7 meter at 5 gram sort of interval. So there's work that needs to be followed up here. It's just a bit expensive exploration. So in the short term, we're focusing on the lower hanging fruit in the Abitibi region. And then our Frida and Ava projects, they're located in the James Bay region, right next to Quebec Precious Metals Hakami deposit, which itself has some fairly high grades. These are relatively early stage companies. We just completed a high resolution mag survey on both of these, one of which shows a nice iron formation that's folded, which caused us to acquire some additional claims here to make sure that we don't miss anything. We're going to send ground crews here actually this month to do some prospecting, sampling, and to identify some drill targets for us. So in terms of our capital structure, we've got 60 million shares outstanding. We're very well capitalized. We've got over $5 million in the bank. Like I said, we don't have to access the market anytime soon. We're trading at lows like everyone else these days, which gives us a value in the market of just around $20 an ounce US, an enterprise value of $20 an ounce. So I think we demonstrate good value for investors. Of that 5.4, we've got 1.8 that's flow through, which we need to spend on our exploration projects coming up. And then in terms of management, myself, I have a geology degrees, but I don't necessarily call myself a geologist. I spent most of my career working as an investment banker, financing and advising mining companies in particular. And on the board, we've got a number of great technical people who have all been involved or are currently involved in building mines, as well as our geological consultant who was involved in the discovery of Nelligan and knows our other projects very well. And then rounding up the board, we've got experience from everything from investor relations to the legal and corporate governance, as well as equity and mergers and acquisitions and management. So I've got a great board. They're very supportive, and I'm happy to have them. So overall, just to summarize, I guess we're a low risk exploration play. We've got a flagship asset that is largely de-risked, and which gives us, basically a cornerstone for our value. And then we've got exploration assets that can provide potential additional upside from there.